Hi, everybody. William over here at Viva Realty, and I'm here to talk about rental property, right? We all want to have a income in the future. We want to have passive income into the future. And I know you're seeing all these videos on TikTok and YouTube that most people, all these guys have 100 doors and 50 doors. And it's like, wow, how do I do that, right? So you got to start somewhere. But in reality, do you really need 100 doors? I mean, could you live off of less? Yes, you can, right? So your focus should be 5 doors, which is 5 houses, right? If you're earning $2,000 to $2,500 a month on those houses, you're going to have your taxes and insurance, and you're going to have to cover that once your houses are paid off. Between now and the next 20 years, when you have rental property, who's paying your mortgage for you? Your tenant is paying your mortgage for you, and you're earning a little bit of money every single month. So at the same time that you're earning that money every single month, you're going to be paying it down, and then you're going to be accumulating value in each one of those properties. If you ever want to sell it, you can cash out and maybe take that profit and pay off one of the other houses that you have, right? So we want to focus on 5 doors. We want to focus on 5 houses within the next 5 years, okay? So 5, 5, 5. That's what you want to focus on, 5. You don't want 100 doors and Grant Cardone, where he has all these billions of dollars, right? Or Kawasaki, where he has all this money, rich dad, poor dad, okay? We want to focus on 5 doors. Let's be realistic. Let's get down to a number that you can live with. And then if you're earning $10,000 to $12,000 a month, is that good money? I think so. So I've got a fantastic property I want to show you right here. This is a brand new house that's on the market right now that you can purchase. It's a 3-car garage, okay? 4 bedroom, 2 bath, brand new house, 3-car, where it depends on how much money that you can put down. Now, if you're able to put down 20% of the purchase price, you're going to save on mortgage insurance, and you're going to be able to make a good, solid return of probably around 15 to 17% return on investment. If you don't have that, that's fine. You can put 5% down and still be able to cover the payment with the rent that is coming in and be able to build your portfolio. Now, not only that, you also get tax write-offs. So the reason why people buy properties, the reason why the rich buy properties and they continue to buy properties is because they can depreciate that asset against their income. So they depreciate it against their income and they save money by paying less taxes. So it's not just the payment, it's not just what you got in the property, it's how much money you can save on taxes, how much you can get back on taxes. And there is an excellent depreciation on top of the normal depreciation that you could depreciate every single year a certain amount of the property against your income. There is also an accelerated depreciation that you can do within the first years. It's about 30% of the value of the property. So if you buy a house that's about $300,000 and you can depreciate $60,000 off of your taxes, that means the $60,000 that you made in income, you just depreciated that and you didn't have to pay tax on it. What tax bracket are you in? 20%, 25%, 15%? So if you figure your average of about 20% and you just cut out $60,000, you save $12,000 in taxes. $12,000. So now that property didn't cost you that much more. It actually cost you $12,000 less in the first year. And you get the depreciation on top of that you can do every single year. So it'll probably be about a good 60 plus another $10,000 in depreciation. That's $70,000 that you depreciated off your income and you saved it. So instead of paying Uncle Sam, you took that money and put it into a property for your future. So let's take a look at this house. It is a 4-bedroom, 2-bath home that is available currently. And I'm going to get myself off of the screen there. Hopefully try to anyways. And you can see this property. It's got a 3-car garage. Look at that. 3-car garage right there. Here is the floor plan for it. Here you go. You got 3 bedrooms on this side. You got a dining over here, formal dining. And you got the kitchen with an island. a nice big great room, an owner suite with a huge master closet, bath and shower, and then it's the 3-car garage. On top of that, this is on a half-acre lot and it has no HOA. So you don't have to worry about HOA fees. And this house right here would rent easily for $2,500 a month. So if you're able, depends the type of investor, and this house is on for $291,000, and they're willing to give you the rate of 5%. Now we'd have to probably go conventional if it's going to be a second home or if it's going to be your primary. If you want to buy it as a primary, you can do that. You qualify FHA, you put the least amount of money down, and then if you have to later on move and flip it to a rental, you can flip it to a rental once you buy it. So if it was FHA, your payment on this house at 3.5% down is $2,074. Putting down $10,185. You put down $10,185,000. They're going to pay on this builder, I believe they're paying up to $10,000 to our closing costs. And your payment's going to be, let's just round it up to $2,100. So $2,100 for a 3-car, okay, 4-bedroom, 2-bath house on a half-an-acre lot. $2,100, and you're renting it for $2,500. You're making $400 profit. Not only that, the first year you can depreciate that $60,000 on this home. Speak to your accountant, of course, and that's going to save you $12,000 in the first year. So guess what? You actually got paid to buy that house. Remember, it was $10,000 to put down. You saved $12,000 in taxes. So you just got paid $2,000 to buy a house, and you have an income of $500, $400 a month in the first year. The next year, if you raise it up $100, you can make $500 a month, right? So this is a fantastic investment, one of the best. I'm always on the lookout for these things. I'm always looking to see what properties work, and I really, really like this house. It is fantastic, and with a 3-car, really makes the difference on this home. 3-car garage. You can see that there. I'll drag this up a little bit. There we go. Drag it up a little bit. And it's 1,800 square feet house, right? So if you're interested, if you want to buy, if you want to invest, remember, you don't need that many doors to be able to retire. Let's start building it now. Let's start doing it one by one by one. And in 5 years, you own yourself your 5 houses, and you just work on paying those off. And you can pay them off within 20 years. It doesn't have to be 30 years. You just add a little bit of more money every month to the principal, a couple $100 a month, and you can pay these houses off within 20 years. And then after 20 years, you're going to have money for your retirement. You'll be able to enjoy life. So give me a call. My number, 407-350-0090. Let me help you invest in real estate. Let me help you build your portfolio so that you can be financially independent and not dependent upon Social Security. So you guys have a blessed day, and let me know.